In the heart of the NASDAQ market, an extraordinary transformation quietly unfolded, one that few investors saw coming. A small electronics firm once known for its wireless audio innovations suddenly rewrote its own identity. That company was WISA Technologies. But on February 14, 2025, it abandoned its old name and emerged with a bold new identity, Datavault AI. For a publicly traded company, a name change is never trivial. Typically, it follows a period of clear strategic repositioning, a stable financial foundation, proven products, and a convincing growth story. Companies usually announce such moves after they have earned the right to rebrand. Datavault AI did the opposite. The new name appeared first, before new revenue streams, before operational proof, before any evidence that its transformation was real. This unusual sequence was the first mystery. The rebranding was not cosmetic. It was an existential statement. The company sought to reposition itself entirely, from a hardware manufacturer into a player in the rapidly expanding world of data tokenization and artificial intelligence. Its new vision was encapsulated in one striking phrase: "We treat data like gold." According to this philosophy, data was no longer just information. It was an asset, measurable, ownable, and tradable. The company promised to build a system that could quantify the economic value of data, secure its ownership rights, and tokenize it through blockchain technology. Tokenization, in this context, means converting real-world assets into digital tokens that can be traded securely and transparently, much like shares of stock. Ordinarily, such a transformation would require collaboration among banks, regulators, and established technology partners. It demands a long road of compliance, integration, and market testing. But Datavault AI claimed it could do it alone. It would develop the entire ecosystem internally: technology, infrastructure, and exchange mechanisms, without relying on the traditional institutional network. This defiance of industry norms was the second mystery. To investors, it raised a haunting question. Was this revolutionary speed or reckless haste? On April 15, 2024, the company executed a 150-to-1 reverse stock split. In corporate finance, reverse splits are generally viewed as distress signals, an attempt to raise a collapsing share price by reducing the number of outstanding shares. They often suggest that management is fighting market perception, not celebrating growth. Yet Datavault AI framed the move as the beginning of a new growth era. This reinterpretation of what is usually a negative event was jarring. It felt less like a restructuring of capital and more like a rebranding of risk. Within months, the company completely pivoted industries, shutting down its legacy audio business and leaping into blockchain, data analytics, and artificial intelligence. In typical corporate transitions, such pivots happen gradually. Companies retain parts of their old operations to sustain cash flow while cautiously testing the new market. Datavault AI, however, executed a total severance. It abandoned its past entirely. Such radical moves can mean one of two things: either leadership possesses an extraordinary breakthrough, or the company is gambling on reinvention as a survival mechanism. Then came the acquisitions. On May 21, 2025, Datavault AI announced it had acquired the assets of CompuSystems, a firm specializing in event and exhibition data management. Management projected that this deal would add $15 to $20 million in annual revenue. Typically, such integration takes 6 to 9 months before showing tangible impact on financials. Yet the company immediately declared that it had entered a new growth phase. The statement came far too early to be backed by results. To seasoned investors, this was not just optimistic. It was premature storytelling, and it hinted that the company was building a narrative faster than it was building earnings. Soon after, Datavault AI relocated its headquarters from Beaverton, Oregon to Philadelphia, Pennsylvania. Normally, companies move headquarters to be closer to clients or talent after a period of strong expansion. But Datavault AI was still operating at a loss. The move, therefore, appeared more symbolic than strategic, a way to reshape image rather than infrastructure. In October 2025, the company announced it had converted approximately $13 million in convertible debt into equity. Superficially, this reduced liabilities. In reality, it diluted existing shareholders' ownership, a trade-off that typically indicates cash flow pressure. While management framed it as financial strengthening, experienced investors recognized it as a liquidity maneuver, not a sign of balance sheet health. Just weeks later, Datavault AI announced the launch of two data unions, blockchain-based cooperatives for sharing and monetizing insurance and accounting data. A data union is a model in which multiple organizations pool their data under shared governance and distribute revenue from its use. For such a system to work, transparency and trust among members are crucial. Yet Datavault AI offered no details, no partner names, no data volume, no projected revenue. Typically, such launches highlight anchor partners or pilot participants to demonstrate legitimacy. The lack of information was conspicuous. It suggested the system might not yet exist in a fully functional form. What the company called a launch might have been a prototype, or perhaps just a concept. Then came another acquisition, this time API Media, a digital marketing analytics company, purchased entirely in cash. The stated goal was to secure recurring revenue, the holy grail of modern tech models. But again, no purchase price, no financials, and no timeline for integration were disclosed. Such omissions are rare. Even in small deals, transparency is key to investor trust. The absence of numbers reinforced the impression that narrative had again eclipsed fundamentals. Then the headline that electrified the market, Datavault AI announced a global licensing agreement with Nature's Miracle, granting the latter rights to use its carbon credit tokenization system. The company would earn 35% royalties on all transactions. In the licensing world, royalty rates typically fall between 5% and 15%. A 35% royalty is so far outside the norm that it raised eyebrows across the financial community. Investors quickly formed two hypotheses. Either the deal's scale was too small for standard economics to apply, or the contract was designed primarily for publicity. If transaction volumes were negligible, the high percentage would produce very little real income. In other words, the deal might have been symbolic, more about signaling innovation than generating cash. Around the same time, the company announced a partnership with Max International of Switzerland to launch the Digital RWA Exchange, a platform for blockchain trading of real-world assets such as carbon credits. Ordinarily, such an exchange would require regulatory approval, a process that takes months or years. Datavault AI, however, offered no documentation of licensing or oversight and yet claimed commercialization was already underway. This unrealistic acceleration only deepened the mystery. Was the company genuinely breaking barriers or simply skipping steps that others could not afford to ignore? All these developments share a single thread: grand vision, little evidence. There were announcements without numbers, promises without timelines, and partnerships without transparency. The company's Altman Z-score of -4.5 and Piotrowski F-score of 2 indicate financial fragility, yet its communications projected unstoppable momentum. To investors, this combination feels familiar and dangerous. The market has seen many such stories before, companies that sold dreams faster than they could deliver reality. Still, the possibility remains that Datavault AI could defy the odds. If its next quarterly report reveals genuine recurring revenue and scalable traction, skepticism could transform into admiration. But if the numbers once again fail to appear, Datavault AI's saga may join the long archive of corporate myths built on narrative rather than profit. The truth will arrive soon. Also, the Valuester channel welcomes your tips and insights about emerging stocks, listed, unlisted, or pre-IPO, as well as any crypto projects you believe deserve investigation. Share your suggestions in the comments below. Your input directly shapes the next story we uncover. And to our loyal viewers who watch, subscribe, like, comment, and share our videos, thank you. Your engagement fuels our work, and we'll continue delivering the most compelling financial storytelling possible. This was Valuester.